Greetings again, traders. I am going to quickly show you how I used to trade. This could be how to journal, okay? You can learn one or two things from here and develop your own trading plan. Remember, we said at the end of the training program, you are going to be able to develop your own trading plan and your own trading system. So when I started trading, there were a few things that I used to do. I will look at the market. Let's say when the market is closed on Saturday and Sunday, I will go into the market and I will look at the currency pairs that I would love to trade when the market opens on Monday. And I will just write it down. If I think a particular currency pair is going to buy, I am going to write it down. For example, you see here, this is GBP USD. I am going to write GBP USD buy, and then my entry price, I will write it down, my take profit and my stop loss, where I will want to take profit and where I will want to get out if the market goes against me. USD JPY, I will do same. Euro USD, I will do same. Any pair that I think is going to move in a particular direction, I am going to write it down. And then at the end of the day or at the end of the week, I will come back and I will look whatever it is that I anticipated at the start of the week. Did it play out well? If it played out well, I will just tick it. If the other one played out well, I will tick it. You see, I write here L and W. L means loss, W means win. So if I won, I will come and tick here and said, okay, it was a win. You see, so you can develop this. When the market closes, you step back, you go into the chart, you look at the chart, you look at the possibility of what could happen in the forthcoming week, so that when you get into that week, you are already prepared. You are prepared about what is going to happen in the market. You are not surprised. Okay, now I will come this way and I will write all the trades that I took. This was in March of 2022. I will write all the trades that I took. You see, all the profits that I made, you see here, all the profits that I made and all the losses that I made. If you notice something, you realize that I used to trade a lot. And this is one of the mistakes that beginner traders make. Remember in our video when we talked about the mistakes that beginner traders make, we say they trade a lot, over trading. So you see, all of these open positions is too much. It's just too much. You don't have to trade like this, please. Don't try this. Then I will look at the loss that I made, the overall loss that I made, the overall profit that I made, and then I will calculate everything and I will write it down. So I'm going to show you something very important. Then I'll go and look at something. Where did I go wrong? This is where I went wrong. I'm going to write it down. For example, I traded without a stop loss. Remember, we said one of the mistakes that beginner traders make is that they always override their stop losses. It is a very bad practice. Don't do this. And I traded on a high lot size. This is overexposing your account, over leveraging. You trade with a lot size that is above your capital or your account size. It is not a good practice. We said one of the mistakes that beginner traders make is that they override their stop losses and they over leverage. Please do not do that. Another mistake that I make, or where did I go wrong? The second one is I opened too many positions using a very high lot size. So you see, this is still overexposure. Like I expose my account a lot, opening too many positions. We said that when we learned about the mistakes that beginner traders make in the market, overexposure. You open too many positions and you expose your account. The next one is I over leverage with a small account. So you have a very small account, but you want to open a very big lot with an open trade with a very big lot size because you want to flip your account. It is a very bad practice. Don't do that. The third one is acted on emotions. Yes, when you start trading, emotions will step in. Sometimes you will exit trades when you are not supposed to exit. Sometimes you will take trades when you are not supposed to take, like FOMO, fear of missing out. There are trades that you need to wait for them to play out, but because you are afraid that you are going to miss out, you will step in and take the trade. You are acting on your emotions. Maybe you see $100 floating Rather than waiting for it to hit your TP, you will quickly close it because you are scared. Your emotions are taking over you. Okay, these things you are going to go through it when you start trading, but you have to learn from this. Over expected from the market. You don't have to over expect from the market. The markets are not really friendly. Yes, they are not really friendly. Don't expect a lot from the market. Sometimes when the market gives you what it gives you, just take it and leave. Don't expect too much. Then I sold at an uptrend. See, always try to buy when we are in an uptrend. Remember, I taught you about market structure. If the market is forming higher lows and higher highs, only look for buy opportunities. Do not sell unless you know what you are doing. Okay. Then I bought at a downtrend. This is the same thing. If the market is forming lower highs and lower lows, only look for sell opportunities because it is in a downtrend. Do not buy unless you know what you are doing. Now, this is another one. No trading plan. Yeah, when you start trading, it's very difficult to have a trading plan. Like you are just jumping in the market in and out and you don't know exactly what you are doing. But you should try to develop a trading plan. I taught you about time frames. Know when you can go into the market, know when you should not be in the market, know what you are risking, and know what you are not risking. Using a light stop loss, especially on Euro USD. Sometimes your stop loss can be too tight, and then the market will come, stop you out, and then move in your direction. So you are going to learn how to manage all of that so that your stop loss should not be such a way that you can easily get stopped out in the market before the market moves in your direction. Now then I will come down and I will write recommendations. What are the things I think that I can improve on? Now I say know how much of your account balance you are risking. This is something that we should take seriously. You should know how much of your account balance you are willing to risk. Okay, you should not just trade because you want to trade. If you have $100 account, know that you are risking $10 or $20. Do not risk $50 or $80 because if the trade goes against you, you are going to blow that account very, very fast. Then the next one will be use a very high lot size. So I need to avoid using a high lot size because if I do this, it's going to damage my account. Okay, so that's the recommendation. I should stop using a high lot size. The next one is recommendation is I need to stop opening too many positions at the same time. Okay, then know when to enter and exit the trade. That's something that is very important. Before you take a trade, you need to know when you are getting into that trade and when you are stepping out of that trade. So these are the recommendations. Know when you should get into a trade, know when you should exit. Do not overtrade, do not override your stop loss, do not overexpose your account, do not over-risk your account, do not use a very high lot size. Know how much you are risking before you can step in a trade. I hope you learned something here. Then the next week again, I'm going to step and I will write what I think is going to happen in the market. I'll write it down. I'll write everything. If I think this pair is going to sell, I'll write. If I think it's going to buy, I'll write. Then at the end of the week, I will come back. If the things actually played out, I will tick them. The ones that I failed, I will tick them also. And then I will come back. I will check how much I traded that week. How much did I make? How much did I lose? And then I will calculate everything, my profit and my losses. And then I will calculate everything. Then I will go back again. And I will write what were the mistakes that I made for that week. I used to do this every week. Okay, what were my mistakes for that particular week? You see, I trade a small lot. Sometimes if you have let us say a $1,000 account and you are too scared that you are going to lose your money, you use a very small lot size. Even when you make profit, you are going to make very small profit because you don't know which lot size to use. So using a smaller size with a big account can also be another mistake, even though it's a way to protect your account. Using higher lot sizes on small account, I still made the same mistake. So when you start trading, you are going to make a lot of these mistakes. Okay, non-moving stop losses into profit zone. Yeah, this is like scaling in. Sometimes when you take a trade, let's say a trade is in your favor and you are making like $200, it is always very advisable that you should take your stop loss into profit zone and close some profit so that even if the market reverses against you, you are not going to lose so much of your account because your account is already protected. You are going to see that when you start trading. Do not worry. say using tight stop losses. Yeah, tight stop losses is not good because the market will come stop you and then move in your anticipated direction. So your stop loss should be such a way that the market can breathe and then still go in your direction successfully. Using wide stop losses here, sometimes you can over widen your stop loss. Over widening your stop loss is like not using a stop loss at all, because you don't know how far the market can continue to go against you. Sometimes it is better to get stopped out than being a trade that is going against you, because you don't know for how long that trade can continue to go against you. Acting on emotions again, I said this already. Buying at a resistance level. You don't need to buy at a resistance level, you need to sell. So these are some of the mistakes that I used to make, and I've heard all of them. Wait for a good setup, allow candles to close, market to breathe. These are some of the mistakes that I used to make. Okay, so sometimes I'll not wait for a good setup, I'll just jump into the trade and I start taking trades. As a beginner, you are going to make some of these mistakes, but the good thing is that we are here to guide you so that you don't have to go through all of this. The next week again, I'm going to step, this is the third week, and I will write everything that I think based on my analysis I think is going to happen in the market. Know that you're not going to trade all of these pairs, you are going to choose 2 or 3 pairs and you're going to trade them. Don't trade all of these pairs, please. And then when I come again, I'm going to do the same thing. I'm going to write all the trades that I took, the profits that I made and the losses, and I will total them, and I'll know how much I made for that week and how much I lost for that week. And then I'll still write my lessons. What are the things that I did that were not correct? I acted on emotions, fear and doubt. Sometimes fear will step in, emotion will step in, doubt will step in. Those things are very normal when you start trading. Closing and exiting winning positions too early, yeah, because you take a trade and the trade start going again in your favor. You are seeing $100 or $10 or $20 and you are so excited and you are afraid that, hey, if I don't close this trade, I am going to lose it. And then you close the trade too early, then the trade begin to wonder, like, what if I did not close this trade by now? I should have been making $500 or $600, but I closed the trade too early. So these are some of the mistakes that beginner traders make. They exit good positions too early and they hold bad positions for long. You are going to learn all of this. No take profit target. Yeah, sometimes you open a trade and you don't even know when you want to exit the trade. You don't have a target profit. So it's not a good thing. The market will go in your favor and then reverse again and stop you out of the market. It's a very bad feeling and a very bad thing to go through. So please, you have to learn from this. Not waiting enough for confirmation before taking a trade. These things happen. Acting on emotions, you need to wait until you have confirmation before you can take a trade. Large lot sizes again on a small account, spending too much time on the market. Sometimes when you spend too much time on the chart, it can be very dangerous because you are going to make very, very irrational decisions. Sometimes just take a trade, walk away from your chart. Whatever happens, happens. Okay, opening too many positions at the same time, these things is, you don't need to open too many positions. Like you have said, you are going to overexpose your account, and if things go against you, it's going to be very bad. Okay, buying in a downtrend, selling in an uptrend, the same thing, the same mistakes. You will make those mistakes until you finally become stable. These are some of the things again, and then I will write my recommendations. This is one of the things, giving money back to the market due to impatience. Remember I said, when I taught you about sessions, I told you when you make profit in one session, do not trade the other session, because it is very possible that the next session you are going to lose all the money that you made. Like the profit that you made, you are going to give it back to the market. It's a very bad feeling. When you make profit, stay away, don't trade again, because you give that money back to the market, and it's a very, very painful feeling. Okay, then not be in the market than be in the market losing, which means you don't have to trade all the times. Okay, not taking a trade is a trade already. Yeah, rather than be in the market when you'll be losing, don't trade, please. Giving money back to the market is a very bad feeling. Don't do that. Some of the things that I used to make, some of the mistakes that I used to make, I can go over and over and read them, but don't adjust your stop losses. The market will always give you another opportunity. That is true. If the trade is going against you, just get stopped out and then look for another opportunity. I think we learned about all of these things when I taught you the common mistakes that beginner traders make. These are things that I used to write. Okay, you can develop your own trading model, and this is April 23rd of 2022. These are some of the things that I used to do also. I'll just write them, like everything that I've shown you here. I'll come at the end of the week, how much did I make, how much did I lose, and then I'll sum and I'll total, and I'll be like, what what was the result of that week. Was it a positive week? Was it a negative week? And then I will look, what are the mistakes that I made. I will write them down. What are the recommendations? What is it that I can do so that I don't repeat those same mistakes again? I will write them down, and it's really helped me. You can also develop your own model. It will depend on you. When the week starts, look at the chart. Okay, before the week starts, like on weekend, look at the chart. What is it that you are thinking about the market? Do you think the market is going to be a buy, and why is it going to be a buy? If you want to take a trade, why will you take that trade? Where do you plan on exiting that position? Where do you plan that if things go back, let me get stopped out? Okay, and then at the end of the week, you should calm down. Even before the end of the week, before you even take that trade, write the currency pair like I used to do here. Make sure you write the currency pair, write the entry price, write your take profit, write your exit profit, write your stop loss, write your stop loss, such that if this trade plays out well, you will know why this trade played out. If you are buying, you should write, why do you want to buy? Why do you think this currency pair is going to buy? You write it down. If you are selling, why do you think this currency pair is going to sell? You write it down. If eventually things play out, you come back and you write it, okay, I anticipated that this currency pair was going to buy, and indeed it bought. It went in my direction 20 pips, 30 pips, and I made profit. But if it did not play out, you are going to come and write, I anticipated that this currency pair was going to buy, but unfortunately it went in my against me and I lost this amount of money. Now you calm down, you are going to write, if 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 I made a mistake, what is it that I made? You write it down, and then you come, what are the recommendations? What are the things that I can do so that I can improve, so that I don't make the same mistakes again? You write it down. You are going to do it for your own way. You can do it on an Excel sheet, you can write it manually, and then every week you come at the end of the week, you access how many trades did I take for that week, how many lot sizes did I use on that in that week, how many wins did I make, how many losses did I make, and then you review it, and then you try to see how you can improve in the forthcoming week. This is how you can develop your trading plan, and this is how you can develop yourself as a trader. You are going to do it your own way, but this is what I used to do. I recommend that you should write all of this. Write every trade that you are taking. Write why you are taking that trade. If it is possible, make sure you take screenshot. When you place a trade, take a screenshot and keep it before you take the trade, or when you take the trade, take a screenshot and keep. Take a screenshot during the trade and take a screenshot after the trade, so that in future you can produce even there's what we call there are apps where you can write all of those things. You add a screenshot before you took the trade and why you wanted to take that trade. You add another screenshot when the trade was playing out, and you add the next screenshot how the trade played out eventually, and you write what happened and why you thought that trade was going to go in that way. This is how you are going to develop yourself, and give yourself 1 year. You will come back and you realize some of the mistakes that you used to make and some of the things that you used to do that you can help develop yourself and improve in the next future. I hope this was able to help you. It's kind of weird, but just take the message and see how you can improve for yourself. Thank you so very much. This is trading plan and how to build your trading plan. Thank you.